Welcome to TheoTrade. This is Don Kaufman. It's December 26, 2018, and you are watching the TheoTrade evening video. It's a rip your face off rally. People, we're going to give you 5 reasons not to believe in this rip your face off rally. Let's get right to it, because that's the big question, of course. You see the S&P's right now up just a hair shy of a 5% move. The Nasdaq is up just a hair shy of a 6% move. I mean, it just quantifies, it defines what is known as, again, that kind of quintessential rip your face off rally in the midst of some sell side activity. With that, let's get right to it. Let's show you 5, very clean reasons why you should not, at this point in time, necessarily trust this rally. Reason number 1 we're going to kick off with here happens to be the Volatility Futures. Now, for those of you that speak a little bit of geek and you're into Volatility Futures, let's actually go to a daily chart of the Volatility Futures. And I just want to zoom in to this daily chart of the Volatility Futures and display to you first and foremost. Here's the Volatility Future. This is that kind of wicked sell-off, of course, on Christmas Eve, and here is effectively today. So for the most part, from a volatility standpoint, yeah, we haven't even dropped back to where we were, of course, on Monday. So the volatility, all right, but that's kind of suspect, Don, you know. The volatility did drop. Now, let me actually show you a little bit about the Volatility Futures themselves. This is kind of what I read into, is what we kind of term some of the structure of volatility without going too deep into the structure of volatility. What I'm effectively going to show you here is take a look at the Volatility Futures for 21 days, right? So 21 days, they've actually dropped off to about 24.52. You go out a little further in time, go out to the 49-day Volatility Futures. They're effectively, 22.56, and it drops off even more from there. What the Volatility Futures are, in effect, telling you is we are by no means out of harm's way. Okay, how can I see that in the Volatility Futures? Well, it's actually fairly simple. Again, look at the 21-day Volatility Futures, the 49-day Volatility Futures, and the 83-day Volatility Futures. And effectively, what this tells you is there's more risk, in the next 21 days than there's going to be in the next 49 days and the next 83 days. So the vol structure still is completely and totally inverted. Anytime there's an inverted volatility structure, you're led to believe that the rally, it ain't going to hold. It's just not going to bite. That's one of the first reasons that I would not trust this explosive rally. Number 2, correlation coefficient. It's pegged. This is another thing. What this basically means, there's just indiscriminate buying activity. What that effectively means is no one actually cares about any individual stocks. We're not going out and quote unquote, we're buying of a dip. First of all, when you're correlated like this, the futures are going to lead the order flow. What that effectively means, when I say the futures are going to lead the order flow, firms come in, they actually buy the futures, or more appropriately, they're covering their futures. That is, if you're short, if you're short, you want us to go down. Eventually, if you want us to go down, you got to cover. What do you got to do to cover? You got to buy them. So we buy back, we explode back to the upside. Then what has to happen? Well, the S&P 100, the basket has to move behind it. And when you start to see things like the correlation coefficients, that's 100%. Everything is moving in relative tandem with the S&P futures. That is not indicative of kind of like, discriminate, kind of going in there discriminating about like, okay, let's buy this, let's not buy this. It's completely indiscriminate. We're just going out there and we're buying because we're just buying the S&P futures. So correlations, again, along with volatility futures, tell us very definitively, all right, this is just, again, kind of the quintessential rip your face off rally. Let's add to the equation a little bit. What can we add to the equation? Let's take a look at volumes. Now, volumes, of course, are going to be a little bit suspect. Why? Why are volumes suspect? Come on, it's like the day before Christmas, the day after Christmas, Today, a lot of European, markets are closed. It's Boxing Day. But effectively, what I'm telling you is, all right, leading up into this, here's some of the volume in the S&P futures. Right, you're doing 2 million, you're doing 3 million, you're doing 3.5 million, some extreme days. Here's even Christmas Eve. Lots of markets are effectively closed on Christmas Eve. Here's today. Remember, Christmas Eve, that's a half a trading session. This is a full trading session. Where are we? Absolutely nowhere. Again, this doesn't look like people are actually putting money to work. What does it tell you? They're not putting money to work. All they're actually doing is covering up their tracks, covering up their mess. Looks like some short covering, which again is how you get kind of a rip your face off rally. So we talked about volatility futures. We've talked about correlation. We've talked about volume. Now let's get down and dirty. Let's actually look at the VVIX, the VIX of the VIX. That's what the VVIX happens to be. The volatility of the volatility index. Where is it? It is down. But, okay, not only is it down, it's actually down in like record amounts. It's actually one of the largest. It's hard to see on this 5-year. Okay, I'll zoom in a little tighter for you. It's one of the largest one-day drops, okay, that you're going to find inside of the VIX of the VIX. Effectively, what it says, okay, is traders, they are selling, okay, the daylights out of VIX options. Specifically, which VIX options? VIX calls. Okay. Why are they doing it? Volatility was all pumped up. Effectively, the way to think of this as a trader, they're selling it. Why? Because they're going to get ready to reload. Reload! And when you start looking at the VIX itself, the VIX may be down down about 16%. But again, I'll reiterate this because it's very similar in context to what I just talked about a moment ago in the volatility futures. But take a look. There is the burst up in the VIX, and here's actually the VIX coming in. The VIX still hasn't come in to even where it was, okay? But on the beginning again of kind of, Monday in that half a trading session, more along the lines of Friday. So again, at this point, the S&Ps now, look at this. They're flying with only 4 minutes to go left in the trading day. They're up 120. But you actually have to stand back and laugh. The Dow is up over 1,000 points. You're like, it's going under 20,000 until it rallied, 1,000 points. Again, we're going to hit all kinds of records today. Records, first of all, for the biggest rally after Christmas, ever. We're also going to have, in terms of the largest point moves in history, the Dow is actually very, very close to that. So again, sadly, I keep these records in my head, but I'm not done yet. So the VIX, if we take a look in detail at the VIX, and this is going into the VVIX, look at option statistics, right? Here's a seemingly quiet day. Yeah, it's a quiet day, but they are selling those calls. How do I know they're selling the calls? Okay, we know they're selling the calls because the volatility on the options themselves isn't just down. Okay, that's what the VVIX measures. The volatility on the VIX options is down actually almost to, again, record amounts. So I could go all day about this in its entirety, but effectively what we're saying is they just came in here and absolutely whacked volatility without discretion whatsoever. Again, it's the same thing as kind of covering your shorts. So we have the volatility futures, we have the correlation coefficients, we have the volume, we have the VVIX. Okay, what else do we have? Well, let's actually step back for a second, look at a little bit of a broader chart. Specifically, we're going to bring up the spiders, and I just want to bring up the spiders. I know you're going to think this is crazy. Let's go for a 20-year. Let's go 20 years in the spiders. Just close up that left side bar with 3 minutes left to trade. All right, people, here's what we're into, okay? This is 10 years, 10 years of buy-side activity. Because the big question is, the really big question, I mean, everybody's like, all right, this is going to be an opportunity. We're right on the cusp of this bear market, but maybe it's already over. Okay, calm yourself for just a second, okay? If you take a look at the spiders, again, on a 20-year, that's a little bit scary. Now, this is a 20-year monthly, so you can obviously see some of the damage that's been done. Here we have a little bit in October. November's fairly flat, and December gets absolutely decimated. Clearly, we're pulling up a little bit today. But when it comes down to it, and I started looking at the SPX, okay, and I took the SPX instead of looking at a 20-year in the SPX. I just actually brought that, and we're going to do it right now. We're going to bring it into a tighter time frame. Do you realize the volatility started let's call it October 1st. That's 13 weeks. 13 weeks. So you mean to tell me, okay, and I just want to put this again in context for just a second here, that in 13 weeks, that's it, we're done? That's all the sell side activity? Now, obviously what I'm saying, okay, in here, yeah, that's a little bit open for, interpretation, but you're not going to get me to believe that 13 weeks of volatility is all she wrote. Okay, because when you start opening this up now, again, on a 20-year perspective, there's some sell-side activity, a little sell-side activity over here. We're supposed to believe that this is effectively going to stop after just 13 weeks. Okay, when previous sell-offs of this magnitude They didn't last weeks. We measured them on a scale of years. With that, not exactly some happy thoughts, but again, wanted to give you 5 very clean, very definitive reasons that the sell side activity is not necessarily over. Okay. Another little portion to that, I don't necessarily believe that we're going to go right back into it. I think that we could have a little bit of a low. Okay. Maybe a few more days of an up move. Nevertheless, okay, this volatility is far from over. With that, thank you very much for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.